Hey everyone, me Kevin here. The Small Business Administration just came out with brand new guidelines for PPP loans for self-employed individuals, which is really exciting, especially if you are a 1099 filer or you are just straight up self-employed Schedule C. A lot of folks who had zero or a negative net income have been excluded from the SBA's forgiveness program, the Paycheck Protection Program, which is basically a way for you to get totally free money forgivable, which that's the kind of their way of saying we're going to give you a loan, and then as long as you follow the rules of the program, you can get that loan forgiven. In other words, it's kind of like they give you free money. The real power in it though, and this is why you really want to pay attention to this, is look, if you're self-employed, which self-employed means maybe you're a hairdresser who's a 1099 contractor, a realtor, Uber driver, Lyft driver, you got a small business, maybe you don't have any employees, it could just be you, maybe you do have employees, it doesn't matter. You do some kind of small business where you file either a Schedule C or you maybe get a 1099, where you're self-employed, you're not getting a W-2. Then you really want to consider getting the PPP. Or maybe you do get a W-2, but it's from your own S corporation. Then you also want to consider getting a PPP loan. Basically, the PPP loan is going to look at your numbers, your income and your expenses, and try to come up with a figure that they can give you totally for free. Now, there are two rounds of this program. The first round is Ppp Round One, and you didn't need to have any kind of decline in income to get Ppp Round One. You just had to sign a statement saying that the first PPP loan is necessary for you to continue business operations. Basically, if you have high uncertainty that for some reason your business might collapse or you're barely getting by, you need the money, or you have a fear that in the future you're not going to be able to get by, then you can apply and get a PPP loan. The round two is reserved for businesses that have had a decline in revenue of at least 25%. So for example, if let's say in, let's say 2019 quarter one, you had $100,000 of business gross income, and then in quarter one of 2020, when March came around, the pandemic, things started shutting down and slowing down towards the end of Feb in March 2020, your income fell, and you only had $70,000 of income. You might be eligible for round two of the PPP. Now, this video isn't designed to go through the exact eligibility for round one versus round two. We've got plenty of videos not only on the channel about that, but there are plenty of other resources for this. This video is going to be dedicated to some of the big changes, specifically for those of you who have had negative income and you've been already denied in the past, or you've just been discouraged from applying because you haven't had positive net income and you're like, it doesn't look like I can get this program, so why bother listening to the PPP? Well, a lot has just changed, and this video could get you a lot of free money. And in addition to free money, and I don't get anything out of this, I just want to provide the value here. In addition to free money, remember, the cool thing about the PPP is this. If you get a, let's say, $20,000 PPP loan, and ordinarily you pay around 25% in taxes. So when you get your income, you pay around 25% in taxes. The cool thing about the PPP loan is, let's say you get a $20,000 PPP loan, and then you spend that $20,000 on business expenses, which are a write-off for your business. You are going to be eligible for taking the tax deduction for those expenses, even though you're technically getting free money. Which, bottom line, in the example of you getting $20,000 plus you pay usually 25% in taxes, would mean you would get a roughly $5,000 additional tax savings on top of that. So it's kind of literally like the government going, yo, here's 20 grand plus a $5,000 tax credit. It's like really juicy. So look into this if you haven't yet. Like you could, for example, go to metkevin.com/VEEM, Veeam. That redirects you to, a pretty easy PPP portal. I don't even get a thank you for referring you to that. I didn't set anything up with that company. It's just the one that I had helped people apply through in the past, and it was pretty useful. I actually think a different company is running it right now. I think it's Blue Vine or whatever, so you can Google them directly. But anyway, what I want to do right now is show you the changes. And so the SBA released some new guidance today, and it's going to be useful for us to just go through some of this guidance. So take a look here. This is where the rubber really hits the road. This interim rule, or final rule, allows individuals who file a tax return, Schedule C, self-employment, to calculate their maximum loan amount using gross income. Folks, gross income there is huge. It means you could actually apply for the PPP using your gross income, not your net income. So if you wrote off all your car expenses for Uber, as a realtor, you wrote off all your signs and this, that, or whatever, you had negative income, boom, gross income. Huge changes. They're also letting people now apply who have had non-financial fraud felony convictions, and removes the eligibility restriction that prevents business owners who are delinquent or in default of their student loans or federal student loans from getting a PPP loan, which is great. All right, so this is going to be effective pretty soon. It's supposed to be immediately. It's supposed to be effective as of a few days ago, but they just came out with these rules. And the deadline to actually start the PPP program is coming up. I believe the deadline is March 31st. So you really have a limited amount of time to do this. And I don't want to come across as like salesy here, like act now before it's too late, but act now before it's too late. So anyway, here's their definition of gross income. So gross income defined is applicable to sole proprietors and independent contractors, and it's going to be any kind of income that you get that is not more than $100,000. That's the hard cutoff for payroll. No individual can get paid more than $100,000 and use more than $100,000 towards their PPP loan calculation. So if you get paid $80,000, you're fine. Okay, great, use that. Okay, great. So you have two options. You could use your gross income or you could use your net income. And every person's scenario might vary on where they might be able to get more money. Obviously, the expectation is people are going to get vastly larger loans if they use the gross income calculation. We'll see, though. So let's go through some of the additional information here. Here they just provide reasons as to why they're doing this. They feel more underserved communities are going to benefit from this. And what's going to be useful here at the same time is what I'm going to do is I'm going to pull up a Schedule C of a tax return. And you can find this pretty easily. You just type in Schedule C tax return. We'll just put in like the 2020, for example. And that way we can make it nice and easy. So we'll pull up a Schedule C here. We'll bring that up on our form or our display here. And what you can see is line 7 here is actually gross income. So you could Google this form, calculate this yourself. You might already have it in your actual tax return, especially if somebody prepared your taxes for you. Okay, so Schedule C is basically gross. And what it says here, if a Schedule C filer has no employees, the borrower, that's you, because remember, you're taking a loan that you're going to get forgiven. So yeah, it's a loan, but it's a free loan, right? Okay, so, and there are no payments on it during your initial drop period. I think you have 6 months, no payments, and you could get forgiveness within those first 6 months. You just have to follow the rules, and the purpose of this video is just to intrigue you enough and show, like, you should do this, you should look into this more. Like, apply, and then call the company you applied with. Like, at the very least, apply with the new rules, and it might take a few days for the lenders to actually catch up with all these new rules, but at least apply under the new rules. And then when you apply under the new rules, call the company and go, yo, I just want to make sure, like, am I going to be able to get this forgiven? What do I have to do to make sure I get it forgiven? And let them tell you, don't take it from me, just apply. Like, the worst thing you could do is apply, or not apply is the worst thing you can do. But remember, you can always take advantage of the fact that you can always apply and then not take it if you didn't want to, right? All right, so anyway, if a Schedule C filer has employees, if you do not have employees, you could use line 7 or your net income. It's totally your choice. Now, there are going to be some modifications, and we'll calculate that in a moment. If you do have employees, you'll calculate your compensation as a share of payroll costs based either on net profits, they say, or gross income minus expenses on line 14, 19, and 26. So basically, if you do have employees, you'll have to go back to that Schedule C and minus off 14, 19, and 26, which you'll see are things like employee benefit programs. We've got, where's 19? 19 is over here, pension programs, and wages here, number 26. So if you have employees, the calculation gets a little bit more tricky, but it's not too difficult here. So, okay, those represent employee payroll costs, and they're kind of trying to prevent you from being able to double dip. It's not a big deal. When you go through the math, that'll totally make sense. Now, in context of determining a borrower's eligible expenses, the interim rule refers to these as proprietor expenses, because remember, when you do a PPP loan, you're getting money not only for Paycheck, money, so to pay your payroll, but you're also getting money for business-related expenses. Now, you can actually be on unemployment and apply for the PPP. You just can't be receiving unemployment pay at the same time you're using the PPP loans to pay your wages. So you would have to go off unemployment, take the PPP money, and then go back on unemployment. Okay, just to clarify that, you don't want to double dip on that one. Now, the proprietor expense calculation limits a Schedule C filer that included employee payroll costs in determining the PPP loan amount from taking the full loan amount as owner compensation. So basically, if you have employees, they don't want you to be able to just take all of the money that you get from the PPP and just pay yourself with it. Like, they want to see that it's actually supporting the business if you have employees. Okay, the easiest thing to do here is jump on over. Oh, wait, I want to talk about this section because this is actually important. And then we're going to jump on over to a calculation and we'll do like an example here. So there's going to be this provision that basically says, I'm just going to summarize this bottom portion here. If you ask or if you report more than $150,000 in gross income on your Schedule C, so if your self-employment Schedule C gross income is more than $150K, you might actually be open to a little bit more investigation in terms of, are you actually in need of this PPP money? So as soon as you make more than $150K in gross income and you decide to use the gross income provision, they're gonna look at your application a little harder. This is just designed to discourage people from people who are like making $500K from applying for this and saying they need this. That's kind of what they're trying to do. Even though technically, like old school Ppp Round One, that's what happened. And if you were asking for less than $2 million, the federal or the SBA was like, no problem. If you're asking for less than $2 million, we'll give it to you. Whatever. You say you need it, here you go. We'll give it to you. That was the old school rule. With this new school rule, because they're switching to this gross income calculation, they're saying, okay, we'll let you use gross income, but if you're gonna use gross income, and your income's over 150, we're gonna look at your application a little bit tighter to make sure that you're not just trying to pull our leg here. So that's what they're clarifying here. So we'll summarize that a little bit. Okay, so here are the steps for actually calculating this. So step one, from your 2019 or 2020 IRS Form 1040, Schedule C, you may elect to use either line 31 net profit, so your net, or schedule, or your line 7 gross income. Now, this is really cool because you have the choice of using 2019 or 2020. Whichever year you use to calculate your payroll, it's very important that you keep in mind they're going to ask you for your filed 2020 tax return. And if you haven't filed your 2020 tax return yet, you have to do a draft of your 2020 tax return. So that way you're at least showing them like, this is what I intend to file with. So they want a 2020 tax return even if you haven't filed yet, if you're going to use your 2020 payroll as a calculation. Otherwise, you could use your 2019 payroll as a calculation. So this is another flexibility thing here, is you get to use your 2019 or 2020 payroll, which is really cool. Now, there are some eligibility requirements, like I think the PPP, and double check this, but I think for PPP, you had to have a business in operation before February 15th, 2020 to actually be eligible for the first PPP loan, and probably the second one as well. But double check that. So anyway, let's do a calculation here, okay? Let's say your gross income was $80,000. In other words, you went over to this this form over here, this IRS 1040, Schedule C, and you know what? We'll go ahead and just drop this really quick into the notes software so we could look at it together here. Let's just drop it into the current document. Cool. So that'll look a little funny because I'll give you a copy of this, but yeah, the 1040 is going to be right here. So you get to see that as kind of an example. All right, so let's say the gross income right here is $80,000. Okay, perfect. So we got $80,000 listed here. And all right, good. So if the amount is over 100K, reduce the amount to 100K. All right, well, it's not, so we don't have to reduce it to 100K. If it was, we would reduce it to 100K. Fine. If both your net profit and gross income are 0 or less, you are not eligible. Yeah, obviously. Like, if you didn't have gross income, dude, like, yeah, you're not going to get this. Okay, now, calculate the average monthly net profit or gross income amount by dividing the amount by 12. Okay, no problem. So divided by 12. So let's grab a little calculator here. And the calculator is going to be, let's just pull that up really quick. So we're just going to take $80,000 divided by 12. And then the rule says multiply that by 2.5 times 2.5. Okay, 16,666. keep that in mind for just a second here. And let's go to the next page here. So it says multiply that by 2.5. This amount cannot exceed $20,833. Well, it doesn't, because we just calculated at $80,000, we would be eligible for about $16,666.7 for our first PPP loan. If you had an income decline in your next tax filing or for your PPP round 2, you would be able to get even more money, especially if you're in the restaurant class. And I think retail or certain travel sectors might be part of that as well. Check into that. It might just be restaurants. But anyway, you would be able to multiply that times 4 instead of times 2.5, which is cool. You'd get a little bit more of a benefit in your second PPP loan, which is super exciting. But verify that. Again, the difference between the second round and the first round, this video is not dedicated towards that. It's just dedicated to really telling you about the new changes here. Okay, cool. So it looks like from our first round of PPP, let's say our net income was 0 because we wrote everything off, but our gross income was $80K. Hey, we should be eligible for $16,666. This is dope. Like, that's freaking awesome. Because remember, we're going to get that tax benefit on top of that as well. If we're in the 25% tax benefit or bracket, that's another $4,000. That's like getting 20 grand. Actually closer to like almost $21,000. But anyway, add any amount of the EIDL loan that you took to this amount. So let's say you took an EIDL loan of 20 grand. Well, you'd be able to add that. And you do not include the advance because you do not have to repay the advance. So in this case, you could get a forgivable loan of up to $36,000 if you had an EIDL loan as well. But let's pretend you didn't have an EIDL loan, which again is different from the grant. Okay, cool. Then you have to provide your documentation. You provide your 2019, 2020 tax returns. You provide your Schedule C. You provide your 1099 MISC if you got a 1099 to verify that you actually made money. You are going to be required to provide documentation for other things that you want to spend this money on. Some of it has to go to payroll. Generally, the rule is either 60 or 80% has to go to payroll, and it depends. It actually might be set at 25%, so check that. They keep changing the rules. Old school was 75% would have to go towards payroll, and 25% would have to go towards expenses like business supplies, mortgage interest, business rents, not home interest, right? It'd have to be business mortgages or business loans or things like that necessary to operate your business. But they changed the rule and gave you the option to say, well, we want to do 60% payroll, 40% for expenses for the business. I think they gave flexibility on which way you want to go with that. This is why generally I just say, look, when in doubt, just apply, see how much you can get, and then get on the phone with these people or ask the person, your rep, once you get assigned to a rep, hey, look, this is what I plan to spend it on. Am I good? That's the way I would handle this. Like, don't take this video for gold. Use it as sort of a springboard to get started and get curious on what this program is about. Okay, cool. So then if, and by the way, to be able to have things be eligible for a PPP loan, you actually have to show that on your tax return. Like, you can't say that in 2019 you operated your business and you wrote off $1,000 a month of electricity, but then you didn't actually write it off on your tax return as electricity. It's like, why didn't you write it off in 2019? They're using the fact that in the past, if you've written something off, it's probably a legitimate business expense, is the way they're looking at it here. All right, so if you have an employee, things get a little bit trickier, but it's okay. At your election, either one, go ahead and enter the net profit or the gross income. So if you take net profit, the calculation's easier. You take the net times 2.5, boom, you're good. If you take gross, it gets a little trickier. So you have to put your gross income in. So let's say in this case, your gross income was $80,000 on line 7, but you had employee costs. So you had an employee, and we're gonna now subtract out that employee cost. And the way they do that is they're basically going to take 14, 19, and 26. We looked at those earlier. They want you to subtract those out. And that's going to tell you, okay, cool. So that's the amount of money we have. So let's say we subtract out $10,000. Okay. So now we're at $70,000 in total here. That's less than $100,000. So that works. Cool. We got $70,000. Then they want you to add to that what you actually paid to your employees. So let's say $10,000 was for employee expenses, employee wages, health insurance, and whatever else. But only $2,000 of that was for health insurance and whatever else, and the other $8,000 was for an employee. Well, then they say add back in the $8,000. They're really just trying to get rid of the other expenses, because what they're trying to do is they're just trying to multiply the actual payroll you have by 2.5. They're not trying to multiply all of the other expenses you have by 2.5. So that means, okay, cool, we would have about $78,000 of gross employee wages in this case. Say we actually paid somebody $8,000 a year, maybe they were really part-time or something like that. And then they want you to add back in specific contribution items, which they do allow you to add into the multiplier, which are things like group health, life, disability, vision, dental insurance, and retirement contributions, and state and local tax benefits. You could add that in. Then, let's say, I don't know, let's say that's $1,000, okay, just to make things simple here, $1,000. Now you have a total of $79,000, and this makes so much more sense if you just take out your Schedule C and do it, following these things, and I'll link this document. So you're at $79,000, let's say, then you calculate by dividing by 12, okay, $79,000 divided by 12 times 2.5, got it, okay. So you could do that math, simple. So then, the things you're allowed to pay with the money to be eligible for this to be a full write-off. Employee payroll costs, mortgage interest payments, but you have to actually these have to be business payments, business rent payments. They have to be in the name of the business. You have to have claimed them for a deduction in prior years. Interest payments on business debt, refinancing the SBA EIDL loan, covered operations expenses, and that definition keeps expanding, so you want to look into that. And they'll provide you details for this. Covered property damage from like riots and things like that, covered supplier costs, and so on. I mean, this thing goes on and on. So if you're curious, go to this form. I'll link it down below. But anyway, then they talk about the second draw loans, how you could actually get a multiplier that's larger than 2.5. Oh, it looks like it's actually time of distribution 3.5. It's actually 3.5, not 4. So I made a mistake on that. So if you are NAICS code 72, you would actually get a multiplier of 3.5 times for your second loan. So if I write that down into Google, that's accommodation and food services. That's what my suspicion was earlier. I was just wrong on the multiplier. It's not times 4, it's times 3.5. So that's the benefit they're giving to like accommodations and restaurants. And yeah, that's pretty much it. There is talk about C corporations and S corporations, but in that case, you would be getting a W-2 anyway, so you would be using that for your payroll. And if you have multiple businesses, you can apply for multiple businesses as well. There are more details in this form, but hopefully this gets you excited enough to consider applying for the PPP. I highly encourage that you do. It's free money. I don't see why you wouldn't use it as long as you follow the rules. Yeah, I mean, look, is it a push a button easy? No, it's going to take you 20 minutes to get all your papers together. It's going to take you 15 minutes to do the application. Maybe it'll take you another 30 minutes to ask questions and feel comfortable with it, but then you're good. And then maybe the forgiveness takes you 20 minutes in the future. So you're literally talking about less than 2 hours of work here to, in this potential example, be getting like a benefit of over $20,000. Like, why would you not do that? So anyway, I'm going to link this form in the description down below. So you're going to find this form below the link to get 2 free stocks worth up to $1,850 when you sign up for Webull and deposit $100. You'll see it below the link for my courses on building your wealth, which you can use the coupon code link down below for. And you'll also find it below the link for life insurance you can get in as little as 5 minutes. And of course, getting up to $250 totally for free with BlockFi when you deposit money with BlockFi. Depending on how much you deposit, determines how much money you get. You get paid interest on your cryptocurrency. So check that out if you haven't yet. Thank you so very much for watching, and folks, we'll see you in the next one.